This is Commodity Wrap. I'm Tony St. James. Our guest today is Brian Hoops. Brian's with Midwest Market Solutions. And online, MidwestMarketSolutions.com. More on that in a moment. How about a little bit of a rally going on in the row crops? On Wednesday, we saw the corn market move higher. Beans were higher. Had pretty much lower trade across meal and oil, but double-digit gains over in the wheat market and even a higher close for cotton. So I don't know where we start here, Brian, but quite a bit of green.
Yes, good to see. It seems like bean oil is the one market that maybe hasn't fully divorced itself from crude oil yet. But it seems like the other markets have completely. So we've seen crude oil drop sharply over the last several days, and yet the grain market stabilized and even tried to rally. And part of that rally was because of, I think, technical considerations. There's a major weekly chart support that we've had fallen to in both the corn and the soybeans. And talking about new crop corn, new crop beans, and those price levels around 441 on the December corn and 1131 on November beans, it pretty much wipes out all the weather premium that we had priced in for the growing season at those areas. It just felt like that at that point in time we had, enough was enough. We've seen a lot of massive fund liquidation. They were almost out of all of their long positions, and it's probably too early for them to go short with so much of uncertainty ahead because of growing conditions. So we've seen a little bit of a rally, and this rally is probably unlikely to be anything that will take us back to the old highs unless weather becomes very adverse. But with the break in prices, we've also started to see some export business usher in. We saw 3 private sale announcements last week. We saw a big one this morning of soybeans to an unknown destination, which no doubt the trade is believing it's going to end up being China. There was rumors abounding yesterday that China was looking for U.S. soybeans. And so they have a lot of beans to purchase from the U.S. It makes a lot of sense for them after a $1+ break in prices to come in and at least book some needs that they're going to have or book some of their commitments. They can cancel these. We've seen them do that before. They'll cancel these if prices go a lot cheaper. If prices actually make a bottom and start to move higher, hey, they've got some prices booked. So it's a hedge for them on price on soybeans that they have to buy anyway. They're going to buy 25 million tons this next year. So it's a good start for the soybean market. Typically, these bounces really don't last that we see in June unless weather becomes real hot, really dry. In fact, only out of the last 23 years, only 4 times has corn rallied from now into the end of the month. And soybeans a little bit better, 10 out of those last 23 years, but still less than 50% of the time. So odds are not in our favor to sustain a rally. And you look at the weather forecast, they look really good with a lot of rain. So, certainly if those rains bust, we can extend these gains. But I think there will be quite a bit of selling coming into this market here in the next week or so after this rally matures a little bit and we put a little premium back into the marketplace.
Yeah, and I'd even heard some rumors that it could possibly be tied that unknown destination on 13.7 million bushels to maybe Europe as well. But at this point, I don't think the market cares as long as China's kind of in that conversation. Would you agree there?
Yeah, it could end up being Europe, and probably that rumor started because they're very dry and they may have to import some product this year. I think they'll probably import corn if they import anything rather than soybeans. But certainly, yeah, to your point, the market doesn't care. It's getting export business. That's what we need. This unknown destination. Does it end up being China? Maybe, maybe not. But it's it's an export announcement after a big break in prices. That's what the market wanted to see. That's what it had been rumored to see. And it was kind of a buy the rumor, sell the facts sort of day that we talked about this morning. We opened stronger and then started to fade and took the bottom end of that opening range and did sell this market off to close higher on the day, but not where we opened after that export sale. So, you got to keep feeding those bulls. There wasn't much else to really push this market higher. But they say markets tend to rally or drop in 3-day increments, and so we've seen at least 2 big days. We may see one more day of some fun buying before the market maybe starts to see some pressure. Now, as we go into the June 30th planning intentions report, there is some news starting to come out, some estimates starting to trickle in, and the ones we've seen so far have larger corn and soybean acres as well as spring wheat acres, all increasing from the March timeframe where we saw those planning intentions.
We're talking with Brian Hoops. Brian's with Midwest Market Solutions, online at midwestmarketsolutions.com. Got more on the other side. This is Commodity Wrap.